Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TS MACD Pro traders. The title of this video is how to master a MACD indicator part 5, alright? So I assume that you have already watched part 1 to 4 and you have learned a great deal out of it, okay, to improve your day or swing trading decisions, all right? Each part of this series of video, I will be sharing with traders, okay, a few trading tips, okay, that work, okay? What trader hate most, okay, trader hate things that do not work. All right, they hate things that do not work. So in this part 5, we will be talking about MACD histogram. All right. In fact, if you check our YouTube videos about MACD, this is the first time, all right, that I am talking about MACD histogram. Traders that are following us can confirm that I have never mentioned the MACD histogram. Why? Because I do not use the MACD histogram. Now, if I say that I do not use it, it means that I understand it or I have a substitute for the MACD histogram. I will share with you also, though I do not use it, I can also tell traders that are using it what they should look for and how they can improve their trading decision. I will also reveal to traders what is the substitute for the MACD histogram. Before we continue, ladies and gentlemen, pay attention. Stay with us and watch the full length of this video if you want to understand or master the MACD indicator. All right? So you are using the slow stochastic, you are using the RSI, you want to know what type of trading tool you are using. All right. As I explained to you before, the slow stochastic, the RSI, these are oscillators. Though MACD also is an oscillator, MACD is a trending tool. Now, when we are using the slow stochastic, we are using the slow stochastic or the RSI, we want to catch if the price is trending, but we want to use the slow stochastic or the RSI indicator. We want to catch the mini cycle within the trend. So for instance, if the price is going up, if we have an uptrend, we can use the slow stochastic or the RSI to time the market on the pullback. All right. But these oscillators, talking about the RSI or the relative strength index indicator or the slow stochastic, they are more efficient when we have what we call a balanced market pattern. So you can use different or a specific trading tool for a specific financial instrument. You can use a specific trading system, to achieve, a specific goal. You can also use, the technical indicators for a specific market. So when we have what we call a balanced market or an horizontal market pattern, the best tools are the stochastic or the RSI or the CCI indicator. But when it comes to trending phase or a trending market, either in an uptrend or downtrend, the best tool is MACD, moving averages, trend lines, and channel, okay? Now, let me tell you a story. In order to fool a trader, or if you want to screw a trader, as people say here in London, all right, you want to mess up a trader, you don't have to look too far. All you have to tell the trader is to look at something else. So you may say to a trader, for instance, look at MACD and trade MACD. And you can screw up that trader because you are diverting the attention of the trader, away from the price. Why am I saying this? The price is the number one indicator. Do not be fooled by any other indicators. As I've been saying 100 times already, all technical indicators are useful, but we want to understand that they are giving us only warning, but we are trading the price. Right here, I have the MACD 12.26.9. This is the standard MACD. If you are talking about MACD, we are talking about the green line, which we call MACD itself. But we are also talking about the signal line of MACD, and we are talking about the zero line of MACD. All right. But when we talk MACD indicator, we are talking about the green line, the dotted red line, and also the zero line. But when we say MACD, we are talking in fact about the green line here. But there is something else that traders are using, which they call the MACD histogram. For traders that want to know, all right, it's about knowing, not understanding, you may ask who created this MACD histogram. It's developed by a gentleman called Thomas Asprey. I did not say aspirin, all right? Though aspirin is a wonder drug that people should take. Ask your doctor, they will tell you more, all right? So Thomas Asprey is the person who developed, okay, the MACD histogram in 1986. So this is about knowledge, all right? I do not worry about knowledge, I worry about understanding. So the MACD histogram, okay, measures the distance between MACD and its signal line. So you have to understand why I was going on with all this green line, dotted line, horizontal line. So you see the distance. So what do I mean? Look at this. Yeah? The MACD histogram measures the distance between the green line and the dotted line. The dotted line is the moving average 9 of MACD itself. All right? So what you see here, you see how it hit the top here. This is the MACD histogram here. So all you see here is telling us that the distance between the green line and the dotted line, it hit the peak here. Now it starts going down. Though it's not very clear to us that this distance is decreasing, the MACD histogram at this point in time is telling us that in fact, though with our eyes we cannot see that this distance between the two lines is decreasing, MACD histogram is alerting us that the distance between MACD and its histogram is changing, okay, it's diminishing, and very soon MACD will cross below its signal line, which has happened here. And trader will say that this is a leading indicator. Great stuff, all right? But remember what I was saying to you. You want to fool a trader, you ask the trader to look at something. So you can ask a trader to consider. So sometimes it's not that somebody else is confusing a trader, but traders themselves are confusing themselves. Why? Because they spend 100% of their time looking at the indicators, and they don't even pay attention to the price. What I recommend to traders, recently I was talking to some TS MACD Pro trader. I said, if you have too many indicators on your chart like this, the price is not very clear. You see, like I have it here. The best thing to do with TC2000 is beautiful too. Squeeze the indicator down so you can see the price better. Squeeze the indicator down when you want to look at the price. You see it becomes clearer now. We can see the price, the gorgeousness of the price itself, the market patterns, okay, and what is happening, all right? So remember that you have moving averages on your chart, you have other indicators on your chart, but when you're about to enter a trade or place a trade or analyze a trading setup, move everything down and concentrate on the price, or remove everything and look at the price, draw your channel, draw your support, your resistance level, because you are trading the price. The common trading mistake when traders are using either MACD itself or MACD histogram, which is measuring the distance between MACD and its signal line, as you can see here, all right? Traders spend most of their time, okay, trading the indicators, all right? So why I do not use, okay, the MACD histogram? The reason is, there is a better substitute for MACD histogram. Which one? Is the simple trend line, common sense trend line, any trend line. What we have seen so far about how to master MACD part 1 to part 4, I explained to traders what is the equivalent of MACD crossing above or below its signal line. It means that the price is below its signal, below a common sense trend line or above the common sense trend line. So when MACD is above the signal line, it's telling us that the asset is also above its common sense trend line. Yes or no? You should know that now, okay? All right? It's telling me that it's above the common sense trend line. All right? That's all. So what is the purpose of the MACD histogram? It's telling us that soon, okay, MACD will cross below a signal line. It's giving me a leading warning that soon, okay, MACD will go above or below a signal line. All right? So because I know the equivalent, okay, the substitute for MACD crossing above and below a signal line, which is the trend line, I do not need to use the MACD histogram. I will better use the trend line itself to see clearly what is happening in the market. So as you can see here, let me squeeze the MACD down, okay, and pay attention to the MACD histogram. So you can see here that the MACD histogram was rising, okay, telling me that the distance between MACD and its signal line is increasing, all right? So, which means the bullish momentum is also increasing, but the substitute, in fact, is that the price is above a common sense rising trend line, and the movement of the price is dynamic, okay? But here, now, so up to this point, then we say, so you can see that the histogram start going down before the price crosses the trend line. But if, for instance, you start entering the trade at this point in time when you are using the MACD histogram as a leading indicator, you can get into trouble. Why? Why you can get into trouble? You can enter the trade because you want to be smarter than other traders, or you start trading the MACD histogram before the price. So you see going down like this, you say, okay, the price is going to go down, or but this is not telling you that the price is going to go down. All this is telling you, you see here, is giving you an information about MACD, that MACD is about to go below a signal line. It doesn't mean that the price will definitely go below a signal, below the trend line. So why don't you spend most of your time paying attention to the price itself? Another reason is that what is the price doing all the time? You see, it's above the trend line. If we want to sell it, so we will prefer it to be below the trend line and to retest the trend line, which is the second condition. And at that point in time, we draw our warning line, and we use this point as a bearish setup. So we will wait for a signal and use the trading deal. And if we receive the signal, then we will sell it. But if the price goes above this warning line and find a support, we will not fight it. We will not fight it. So at this point in time, price break below the trend line, okay. All right, the highest resistance here, that's what we see here. So if we want to sell, you see here, it came many times to touch it here before it come down. It's a retest. You see here, this candle here. So it went back, you see, it did below the trend line and went back to retest. The best place, normally this is a bit risky here, we will prefer it to do something like this, all right? And to come back and touch it like this. That will be a low risk entry point. But you see, it just went horizontal and then come down, all right? But if you spend your time, okay, so suppose somebody entered too early here, as you see here, it went tall, and then you have two bar here down, okay? So we are here. Okay, you see where the price is? Pay attention to the vertical line. Okay, I'm going to draw the vertical line so you can see it. I'm not saying that the MACD histogram is useless. I'm saying that traders are misusing, okay, the indicator. And why I do not use it? Because I understand the MACD histogram, all right, that is just a trend line doing the job of ordinary trend line. That's all. That's why I do not use it. I'm not saying to traders not to use it, but I want traders to understand what they are doing, and if there is a better way, to choose the better way to use the indicator. All right, you see now? So this is what's happening in this messy market, all right? Traders also use MACD histogram, the divergence. So sometimes the MACD histogram, you can see here, like you see, there was a low followed by a higher low. This is a bearish divergence. Bearish divergence to what? To MACD itself, MACD signal line. what we see here, this point and this point, a low and a higher low. This is what we will look at MACD. See, the MACD itself is displaying a double bottom here. So it's warning us that this is a bullish divergence for MACD itself, not the price. So all we can say at this point in time is to keep our eyes on the price itself, which we are trading. We are not trading MACD. All right. You don't want to rush and make a decision. You want to pay attention to the market pattern. So what the price is doing here? The market pattern is what here? If you trade, if you are swing trading, day trading, all right, and you don't make your decision with the market pattern, or you are using a TSCW24 SY08, and you are violating constantly the 3 market pattern, you're going to go round. You will change your setting all the time, and you go around and spend thousands of dollars buying different trading system or proprietary tool that promise to smooth the indicator for you, so you may find the best oversold and the best overbought. All right. But it's all come down, the bread and butter, the foundation of successful trading is based on these 3 market patterns. All right? So the market pattern that we see here is what? It's a balanced market, low volatility, okay? And the price confined between 2 resistance levels. All right? So, but you need to understand what is taking place here. The prior move was bearish here, all right, in this session here, followed by this consolidation here. In this case, after I see this, I would prefer to be selling on the edge here. That's why I will give priority to on the edge here because of this move here until we break above this resistance here. All right? So you want to pay attention to the price. 1, 2, what do we say? The third one is mine. So I don't need the MACD histogram to tell me that. The price found a support here. Some people bought it. That's why it changed direction. It was going down first. Minimum price move 1, 2, 3. Some people bought it here. Prior returned back to the same level. Some people bought it again. But you can see as people bought it again, it didn't go and display a higher high. So we know that we need to be a little bit careful. But it returned to the same level. All a TSTW SYS usual trader will say it's a bullish setup. Game on. Signal. Entry time frame. Check the fundamental of Google Finance, the economy news relating to Amazon. By the way, this is excellent stock. But I will be analyzing it on another period, but so far, that's all I can say. So, bullish stock, very bullish stock, okay? So, if you are selling this stock, do not sell and forget, okay? All right? For day trading purposes only, you may sell, okay? So, this is the market pattern, horizontal market pattern, third time. This is just normal. The slow stochastic will do a better job here. The RSI will do a better job here. And we will apply what we call the trading drill. So traders also use the divergence of the histogram, bullish divergence and bearish divergence. So the purpose of the MACD histogram is a kind of indicator of another indicator. The histogram is the indicator of MACD itself. All right, so it's giving us a warning that MACD is about to cross above a signal line. If we see a bullish divergence like this, or we see a bearish divergence, that is a top followed by a lower top. But MACD at that point in time was displaying equal top here. This is a bearish divergence, not for the price, but for MACD itself, because the MACD histogram is an indicator of MACD itself. So once traders go to different stages, I've been through that stages, because when you're a new trader, you go through the indicators, technical, all right? And then you start improving, you start understanding the market pattern, you start going away from the indicator, you're spending more time looking at the price, all right? And you use indicator as a secondary tool just to see what other traders are looking at and go into the mind of other traders. All right, so I do not use the MACD histogram because it is an indicator of MACD crossing above and below its signal line, but the substitute for MACD crossing below and its signal line is in fact a trend line, simple trend line that will do a better job than MACD itself and also better job than the MACD histogram. So it's 3 level below the trend line itself. That's why I do not use the MACD histogram. Traders should understand that I'm not saying that this tool is useless. I'm just explaining to traders the purpose of this tool and how traders can use it. So the distance between the MACD and histogram and its signal line. So if there is a deviation between MACD and its signal line, it's moving average 9. Okay, it's like you can place for the price itself, moving average 9 on the price deviate from the moving average 9. Okay, if there is a distortion, okay, or an imbalance between the moving average 9 and the price will return back to the moving average 9. So return to the mean applies all the time. So MACD deviate from the moving average 9. There's a high chance that MACD will return back to the moving average 9. All right? But MACD can stay deviated away from its moving average 9 for a long period of time. When? You should know this now. When? For a long period of time. When? During the third Elliott wave. This is about multi-talented trading. During the third Elliott wave, you are likely to see, okay, the MACD histogram going up for a long period of time. All right, I don't want the video to be too long. So this is the longest wave. If you're in an uptrend, you will see that the MACD histogram will be going up for a long period of time. All right, long period of time. And you can completely ignore the bearish divergence that the MACD histogram is giving to you during the third Elliott wave. So if you see a bearish divergence, MACD histogram is telling you that, okay, the price is going to change direction during the third Elliott wave, you can ignore it. But there is a better tool, which is what? The trend line itself. Break above, okay, retest, turn around. Break below, retest, turn around. And the trend line will give you the warning beautifully compared to the MACD histogram. That's why I do not use the MACD histogram. So the MACD histogram will stay above 0. It got also the 0 line. So if it's above 0, it means that the MACD is above its signal line. If it's below, right here, the 0 line, it means that MACD is also below its signal line. But as you can see here, I explained to you, you should know now how to master MACD. MACD is below a signal line. It means that MACD is below a bearish trend line. Yes or no? All right, you know it now. You know it now. So I'm not discounting MACD. Okay, I'm not criticizing trade. Market participant, Mr. Thomas Aspray. I'm just giving traders more information because the market has evolved a lot. At the beginning of the stock market, when traders were trading, everybody was trading indicators. Stochastic oversold, everybody buy. Stochastic overbought, everybody sell. And it was so nice for people and easy for traders to trade. But the market is becoming more and more intelligent, more and more sophisticated, and people understand that it's not overbought, oversold, slow stochastic or RSI. It's all coming down to the price and most importantly, the market patterns. All right. As I promised to you, I'm going to reveal to you a better way to use, the MACD histogram. So stay with us, okay, and watch the full length of this video. All right. One of the reasons why also I do not use the MACD histogram is that traders do not use the same setting for MACD. So if you are like me, all right, or you are like a TS MACD Pro traders, we do not use the same setting like the standard MACD. All right, you see, this is one of the reasons. So if, for instance, I change the setting of this MACD, all right, let's change it a bit, and I change it to MACD 24 because of my obsession with number 24, MACD 24 34.9. Okay, this is MACD 24 34.9. You can see this is my histogram. I change it now, okay? This is no more the standard histogram. You can see that I have a different pattern here. And traders spend most of their time, especially if you're a new trader, you will be doing this, okay? Or you may dislike this video because you are at that stage, all right? When you are using, you think that, okay, how can you say this, George? Yeah, I used this last time. It has saved me a lot of money. Yes, it's okay. All right, but over the year, you will start seeing clearer, okay? So it works, yes, it works, but this is not why it works. It works because the fundamental was solid and the price found the support or found the resistance. That's why it works. It's not because of the histogram or the indicators, okay? But the point I want to make to you, another reason why I do not use MACD histogram, traders use different setting, and I use a different setting. So if you have many traders use the standard MACD, so I can switch to the standard MACD to go into the mind of this trader. I want to know what other traders are looking at and what they are paying attention to. So if I have, for instance, the MACD histogram 24, 34, 9 on my chart, this is what I will see on my chart. So if I am trading the MACD histogram instead of the price, I will be trading this pattern here. Suppose, okay, I'm fed up with it and it didn't work because my setting is wrong, all right, for this particular time frame. And I change it again. I say, okay, this one is not working. So in fact, I will use 18, okay? So here it is. I have my different MACD histogram. So are you getting the point? So the different setting will give you a different MACD histogram, and you will be trading, if you are trading the indicator instead of the price, you will be trading all sorts of things. Remember what I said to you at the beginning of this video? The best way to fool a trader is to divert the attention of the trader away from the price, away from the market pattern, away from the market principle itself. So, different setting, different thing. Another reason why I do not use the MACD histogram, I also understand that if you, for instance, you want to use MACD 12, 26, 9, what is the best time to use the MACD 12, 26, 9 and why? So you see, they create an indicators, okay, for the market, but traders must know must know and understand why they should use the MACD 12, 26, 9 on the hourly chart, on the 4-hour chart, on the 2-hour chart, on the 5-minute chart. Now, myself, I create trading tool for traders. That's why I'm saying this. It's not the MACD 12, 26, 9. It's not valid for all time frame. Though traders use it, it's not valid for all time frame. On some time frame, it works beautifully. All right, it works beautifully. All right, the daily chart, for instance, is one of the best time frame for the standard MACD 12, 26, 9. One of the best time frame to use the MACD 12, 26, 9. Now, for instance, you want the hourly chart, you can use it. Yeah, I'm not denying it, okay? I'm not denying people can use it, okay, if you understand it. That's why we are recording this video. But the bottom line, as I explained to you, all right, is that we are not trading the indicators, we are trading the price itself, which is the number one indicator. And there is a better substitute for the MACD histogram, which is the trend line itself. All right? As we are recording this video about MACD, how to master MACD indicator, all right, I want to stress few points. I want to stress on few points again, all right, as I explained to you before. The goal of this video is to help traders understand the technical tool and also to know that the price is the number one indicator and what they should look at. Yes, use your technical indicator if you're happy with it, but do not spend too much time trading the indicator, okay? Do not trade the indicator, okay? So you can see that the MACD histogram, one of the things that trader will tell you is that it gives excellent, okay, a leading indication. So it will cross above the zero line before MACD will cross signal line. Here we didn't see very much. You see it's crossing, it's going back above the zero line. At the same time, MACD is crossing above the signal line. Here, you can see that in fact the price went below its common set trend line, which is the moving average 9 or moving average 8. Okay, the price telling us before it crosses it. Look, do you want to see it? Sometimes you may see that the histogram will cross above the zero line or below the zero line before the trend line. But are you trading the MACD histogram? Are you trading the price? Here it is. The trend line is here telling you that. But as I was telling you, I want to stress on few points. First, MACD above signal line is, we can substitute that, is equal to price above a rising common central line. Here it is, undeniable proof. MACD, we can replace MACD with a trend line. There are more to MACD when we are combining all the three parts of MACD. MACD is signal line and a zero line. All right? So now, the next thing, MACD itself, not the histogram, crossing below the zero line. We have already talked about it. What is the equivalent to that? Have you forgotten? Now, if you did, just put a comment below, John, when you ask that question. I did forget, okay? What is the equivalent for that? All right? D below the zero line, okay? All right? Okay? For the first time, what is the equivalent to it? It means that the price is out of a rising channel, is now going into a declining channel. If MACD crosses below the zero line for the first time, the equivalent is telling us that, okay, the price, the asset, okay, the asset is out, or we have a change of market pattern, that's all, from a bullish to a bearish. So, see here, right? You see, the price is long time out of the bullish channel. Yes or no? Can you see? Look when MACD is crossing the zero line. But this is no bad place. But how do we trade? Okay, this is not a bad place. Okay, this is not a bad place. Okay, how do we trade? How do we trade a channel? We want the price to come out of the channel and do what? And return the channel. Look what he did here. He came out. It was trying to come near. He found a resistance. All right. Which resistance? The lower part of this top one here. All right. Normally, this is a low risk entry point. So if you want to know where is the low, the best place, it's battery work here. All right. But you need to be careful here because the best place is up here. All right. So this is what MACD is telling us when he did below the zero line for the first time after staying above. So he was above the zero line. If MACD stay above the zero line, what is he telling us? He's telling us that the price is in a rising channel. Can you draw a channel? Draw it. So when you are trading MACD, you see doing all this blah, blah, blah up here. Just draw the channel and wait for a pullback. Price might display a higher high before displaying a higher low. When we see a higher low, but the price previously did not fail to display a new higher high, we need to be careful. This is just about the language of the price. On the other hand, if MACD here, as you can see here, is about to cross, okay, the zero line, okay, yes or no? If it crosses the zero line here, we will assume that the price is out of a declining channel and it's about to go into a rising channel, a change of market pattern. But here, we also know that because the price itself was not trending in this case, all right, MACD is likely to give us a wrong signal, yes or no? Because the market pattern, we didn't see okay, a proper bearish channel before. So in fact, it was a little bit bearish. You see, at the point where the MACD is telling us that a bearish cycle is about to begin, in fact, the price found its support 1, 2, 3, and start going in a horizontal channel. So the point I want to make here is that trade the price to use the market pattern, the rising channel, the declining channel, and the horizontal channel. Acknowledge the signal given by MACD, okay, and trade MACD itself. Spend most of your time trading the price on the edge of a rising channel, on the edge of a declining channel, on the edge of horizontal market pattern. When you are using the horizontal market pattern, as I said to you, always look on your left hand side. What has happened before the price starts consolidating? Again, remember this, do not use the technical analysis alone. If you are trading Forex, go to Forex Factory, check the economy news, understand the correlation between currency pair. Trading store, Google Finance, check the economy news. This is Amazon. Read the economy news about Amazon. Check some excellent video about the CEO of Amazon, what it's doing, what's happening. I've been watching some video recently about Amazon on YouTube. I share them on Google Plus also. So, all right. So know what's happening. Do not use the technical alone. Combine the technical analysis and the fundamental. It makes sense. All right. It makes Beautiful sense, all right? So I promise that I'm going to show you another way that one can use the MACD histogram, especially for traders that are trading the forex market, all right? You will find that very, very useful. But for that purposes, I will change my time frame from the, now I'm on the weekly chart. Normally, let's go to the daily chart for a while. Okay, you see this is on the daily chart. You can see that the Amazon stock has gap up recently, all right, a big gap from the level of $300 to this, to the top of the consolidation. You see the consolidation? Because the market pattern, traders know the market pattern is oscillating. People, a lot of traders bought it here. These are swing traders. Talking about swing trading, the pattern is horizontal pattern. Everybody was buying here. You see a surge in trading volume here. So this, now I'm using this is something else. Okay, this is MACD histogram. This is nothing to do with volume here. All right, but if I plot the volume, you will see that there is a surge in trading volume here. So now the point I want to make is here. You can see here on a daily chart where they use the MACD histogram on a daily chart. As I explained to you, MACD 12.26.9 is suitable for the daily chart. It's the best time frame for the standard MACD is the daily chart. Okay, so I'm going to correct my setting again for the MACD histogram to bring it to normal, to the standard. So you can see the standard MACD histogram was giving us a bullish divergence here for the MACD. So it's a bullish divergence, not for the price, but for MACD here, okay? Telling us that MACD is likely at this point in time to cross above the signal line. So, but if you look at the price itself, what's happening here? All right, this is where the price, okay, is crossing below signal line. One thing I said to traders also in the past, when you see a double bottom pattern and the trend line is broken, there is a high chance that the price will not retest the trend line. You did not get what I said now. When we have a double bottom pattern, see, there was a low and another low here, and this trend line is broken, there is a high chance that the price will not pull back to retest this trend line. Sometimes it does, but very often it does not. It does not, because the double bottom pattern is a validation of support level. A double top is a validation of resistance level. It's a bullish pattern. So we can use a double bottom pattern or any time frame, but we will apply it with the trading drill. So at this point in time, this is a bullish setup. First, we are not violating the market pattern. Second, we see a validation of support level. We, as a TSC WSY008 trader or 24 trader for day trading purposes, we go to the signal time frame and wait for a signal. All right? In fact, it was not that the reason. The reason was, now you see here, this trend line here, this is what we are saying all the time to traders. Price break above this common set trend line. You see how the market went blah, blah, blah here. The trend line will help you all the time. Okay, you see the MACD histogram. I tell you that we can substitute that with what? The trend line, simple trend line here. So somebody who is trading the price will draw a trend line like this and wait for what? Break above, retest. Can you believe it? And that's exactly what the price did here. And it's hanging here. And after people see that, they just load it. The next day, the price gap up. Which one would you use? The trend line or the MACD histogram? All right. Which one will you use? The market pattern or the MACD histogram? All right? Okay? Now you see it. All right. Now, the last thing about the MACD histogram that you may not heard about before. Because if I'm going to change the financial instrument, but before that, I will stay here, you see. One can use the MACD histogram as a volume bar. Now, please feel free to punch your computer or to disagree with me. All right. For us that trade forex, we need some indication of what is happening behind the scene. So if you are trading stock, all right, just pay attention to what I'm going to say, because you have the volume bar for trading stock or other financial instruments, but the forex market, we do not have a volume bar. So another way that I use the MACD histogram, which I do not use, but if I want to look at it, how do I analyze it? Okay, all right. we can use it, the MACD histogram, as a volume bar. All right? As I explained to traders at dayprotrader.com, what are we looking for when we are using a volume bar? So if you want to know more about volume trading, go to dayprotrader.com. Right? We want to see, okay, a normal volume followed by a surge in trading volume. So in this case, you can see that my MACD histogram give me a normal progression. You see, they're all the same direction. And now suddenly we see a surge here. Okay, a surge in the momentum. Now, but remember, this is not the volume bar, but we are using a MACD histogram as a volume bar. Because we are trading forex, you need to understand what I'm saying here so you don't get confused. Because we are trading forex, we don't have the volume bar, we can use MACD or MACD histogram. But I do not use MACD itself, I do not use the MACD histogram, I use MACD itself. So when MACD is above signal line and rising like this, in my mind, as a forex trader, I take it as the volume is increasing. But it's not exactly that, but it works beautifully. So when we see a surge in momentum, in this case a surge in momentum, what are we looking for? A surge in bullish momentum. Because we don't have a real volume bar, we are using the MACD histogram as a volume bar. Again, the same thing you see here in this session here for the Canadian dollar, the pound Canadian dollar. You can see that again, normal bar and then a surge, all right? You can see here at the same time on this daily chart, there is a surge and, okay, a trend line, common sense trend line here is broken. So what do we need to do? We use the trading drill. Think of it. I will not dwell on this one too long. I will just put it to you to think of it, all right? So instead of using the MACD histogram, okay, as a signal for MACD itself, if you are trading forex, use it as a volume bar. So one way to do that, okay, so you see here, we are on the lower part of the zero line and the MACD went too deeply, okay? So see it as increase in bearish momentum, all right? Now, when we have increase in bearish momentum, all right, what are we looking for? We are looking for bearish signal and we are looking for lower lows and lower high. You can see at this point in time, though, stay with me, all right, because this is new to you, stay with me, feel free to disagree. Though I will interpret this in my own view that this is a bearish increase in bearish momentum, which is true, bearish momentum. But because I'm trading for it, I will also see is an increase in bearish volume, so to speak. But one thing I will do, I will switch my attention to the price, all right? So what I'm looking for, if for instance, this is a warning, this is not a signal, this is a warning. This is what I'm saying to you. So if you use this as a signal, you will quickly go and sell. So I use this as a warning that there is increase in a bearish momentum. Now I'm waiting. But look what's happened. Though the MACD histogram, as I am interpreting this as an increase in bearish momentum, I did not see the price did not confirm, okay, this warning. In fact, a bearish trend line is kaput. So the opposite of a bearish signal is what? It's a bullish signal. So I have a warning that the bearish momentum should continue. Now the price negates that warning. I will buy instead. On the other hand, if I see, for instance, okay, a bullish warning and the price negates that, I will sell instead. So I say increase in bullish momentum, increase in buying volume. What are we looking for? How do we trade that? We wait for a higher low or a valid signal, all right, a valid bullish signal. But if the price does not confirm the warning, we will do the opposite. So here, if we say increase in bullish progression, but the price negates, the price did not confirm the warning, we will do the opposite. So you're saying bullish, but price dip below the signal line, dip below the trend line, we will sell instead. But we will not sell on a daily chart. You remember the trading drill, okay? Again, this is what we see here. See, increasing bearish momentum. But if, for instance, let me see if I see a beautiful example here. Here you can see here, it was going like this, horizontal. In fact, it was telling that it's increasing because it went from zero, from the here you see start increasing, and then you went above, see this is, again, increase in bullish. So far, it's going from bearish, now you went above it, now it stay above it, now surge. What are we looking for? Higher lows, higher high. We on the daily chart, look, it ran away. So we want to draw a trend line and select a low risk entry point. This is a beautiful warning. A surge in bullish momentum followed by price displaying higher lows and higher high. All right? Ladies and gentlemen, I've said enough. I don't want the video to be too long, all right? So this 45 minutes, so far we are recording this video. I explained to you why I do not use the MACD histogram. One of the reasons is that, okay, we can substitute the MACD histogram with just a simple bullish or bearish trend line, all right? If one wants to confuse the trader, one will divert the attention of the trader to watch something else. The MACD histogram is developed by Mr. Thomas Asprey, and it is an indicator of another indicator. The MACD histogram is an indicator for MACD itself, giving a warning to trader that MACD is about to cross above and below its signal line. As a stochastic MACD trader, we know that MACD crossing above or below its signal line is equivalent to the price crossing above and below a common set trend line. If a technical indicator gives us a warning, we will not trade a technical indicator, we will switch the price and wait for confirmation. If the price negates the warning, we will do the opposite. It makes sense? It is also powerful. MACD histogram will cross also above its signal line, above the zero line, it become positive, is alerting us that the MACD is about to go above its signal line. So, in fact, it's measuring the distance between MACD and its moving average 9. But we know that the simple trend line will do a better job than the price itself. We will not sell or buy with the MACD histogram itself, but we will wait for the price break below, retest, break above, retest. But if the price displays double bottom and trend line is broken, game on will use always the trading drill. All right. Another reason why I do not use the MACD histogram is that one can use different setting for MACD. And also, the standard MACD 12-26-9 is not, in my view, suitable to all time frame. All right, though trader can use the standard MACD on every time frame, the best time frame is the daily chart. All right, this is very important. For the strategy that I've shared with you today about the MACD histogram, how forex trader will use MACD histogram as a substitute for trading volume. If you want to apply that strategy, I don't want you to go on a daily chart. I would prefer that you use the weekly chart. This is one point that I need to stress on. So, same thing for traders that are trading stock. You are using the real volume bar. Do not use the real volume bar on a daily chart. You are likely to get into trouble, okay? Use it weekly chart, or at least 2 days chart or 3 days chart. It will become more powerful. So the same thing I'm saying to forex traders, if you want to use, like here, suppose you see here, okay, it's telling me that, okay, bearish, okay, it's telling me here that bearish momentum is increasing, all right, on the weekly chart. What do I want to see? Now, I will acknowledge this. Now, I will wait for the price to give me a sell signal. Lower low, followed by a lower high. And the common set trend line is broken. Break below, retest. Though you can see the bearish momentum is increasing, you will switch your attention. You will acknowledge, okay, the warning, and you will spend most of your time, okay, analyzing the price, because the price is the #1 indicator. So at this point in time, though the MACD histogram, as I explained to you, we can use it as a substitute for volume bar for traders that are trading the currencies. At this point in time, I will not just go straight away and sell. You can see that MACD was below a signal line also, but the price is not below a declining trend line. In fact, we will see what a market pattern. If we start selling like this straight away, we are fighting the market. Look, it went horizontal for a long time, Okay, and we didn't see any bearish move. Here, MACD is just resetting itself. If you are trading, if you sell here, you are struggling a bit because you are trading MACD, you are selling MACD. Yes, you sell successfully MACD, and MACD went down, but the price itself was going horizontal. You see how painful it was here for all this time. If you did not concentrate on the price or the market patterns that we are trading, MACD was overbought, and MACD was retesting to its equilibrium price level. Now MACD is going back up. But at this point in time when MACD was overbought, the price was not as such overbought. It did not display lower lows, lower high. In fact, here, this is something else that we talk about, stochasticmarket.com. Click on MACD trading. Okay, this is equilibrium price level. When this equilibrium price level of the price is coming together with the equilibrium price of equilibrium level of MACD itself. Ladies and gentlemen, remember one thing in this video. If you are trading, do not trade the indicator, trade the price itself. MACD histogram is a beautiful tool, but should not replace the price itself, which is the #1 indicator. I hope you have learned something for this video also about how to master MACD indicator and will put into use to make excellent decisions. If you like this video, give us the thumbs up. If you dislike it, give us the thumbs down. I don't give it down, all right, if people dislike our video. But what I like when traders dislike our video is to write a small comment and say something like this: George, the video was too long, or something like that, okay? Until the next time, enjoy yourself and be very happy. We are the TS MACD Pro traders. Speak to you soon.